Let's start with one of the big challenges we are facing in Europe, which is the market and the market investment gap. So as you all know, basically the Europe is not leading currently in terms of investments in deep tech. So just to give you one figure, while there are around 32 to 35 billion investments in artificial intelligence per year in North America, there are around 12 billion in Asia. According to our latest figures, there are around 4, maybe 5 billion in Europe. It's growing rapidly in Europe, but we still face a very important investment gap. So I wanted to ask all of you, how do you see the market in Europe and the opportunities we have, but also its challenges? Maybe David can start us off on this question. Thank you.
Sure, thank you. I would say as a starting point, I would make the distinction between investment when it comes to innovation in a generalist way, I would say, contrary to what it is about deep tech, as you were referring to. In terms of innovation, the European market has grown a lot, and I would say exponentially over the last decade. When I joined the EIF a bit more than 10 years ago, we were making 300 to 400 million euro investment a year into VC funds, and it used to represent up to 40-45% of the overall EU market, which was huge in terms of shareholding of the market. Last year, we signed 1.6 billion euros, which is much, much bigger, but it represented only, in a way, 12 to 13% of the EU market. So it gives a bit of perspective in terms of how the market has evolved. But this is when it comes a bit more to an early stage, Series A and Series B type of ICT investments, generally speaking. Now, if the question is more about deep tech, here we have, I would say, an issue which starts from the fact that we have the brains in Europe. We have a lot of very and highly skilled people that developed, disruptive technologies that are not only disruptive by nature, but they're also disrupting business models and markets as we know. But the issue is about funding. There's also always been a difficulty in Europe transitioning from research to market. And we see now, I would say for the last 24 months, we've seen more and more people claiming to be investing into specialized deep tech strategies. And we will come back on this later. We have developed EIF in partnership mainly with the European Commission, specific programs to finance those strategies. But this is still, in a way, a nascent market, and we have a lot to catch up when we compare to other continents.
Maybe Mate, how do you see this from your perspective, particularly also from Slovenia? So how do you see the market? Because I know that your programs have actually taken off tremendously in the last couple of years. So do you think we fully reap the benefits of those opportunities, or is there much more potential there which we could develop further?
Well, I think there are two sides to Europe. There are some centers like Berlin, Paris, etc., and Luxembourg, obviously, the Netherlands. And then there's the suburbs like Slovenia. And here the market is really, especially when it comes to financial instruments, it's really heavily underdeveloped. And when we started the CG program, the Equity Growth Program in 2017, we had one major concern, and this was that we will not have enough pipeline, because although it was a generalistic program, the generalistic fund, it was strictly limited to Slovenia and just a portion of it outside of Slovenia. And our concern was that there will not be enough pipeline. But the truth and our experience is that there was actually too much pipeline, and the fund managers actually had a problem distributing funding to final recipients, because they were in a position that they could do some cherry picking. And if you want to cherry pick among such a vast pool of potential investments, it takes actually a long time to choose the companies and make the transactions. And I think it's pretty much the same with every type of investments in Slovenia and in the region, actually. And I think that the role of the promotional banks, such as ours, is essential because we are basically doing the innovation in the market. Because at the moment, for instance, since we are a bank, we had to invest in a collective investment undertaking, an alternative fund, etc., all these attributes. And this was a type of investment that wasn't known to our regulator, for instance. So we were able to get the regulator acquainted with the type of investments so that now the regulator knows if any other bank would want to make a similar investment, they would not have to go through the same turmoil of clearing up the issues of capital requirements and stuff like that, because we already solved it. And it's a cost that is unacceptable actually to private investors, and is something that is easily borne by the promotional bank.
Let's move to Chris. So how do you see that, particularly in blockchain? How is the market in blockchain developing, and what are particularly its opportunities? Because now there are several VC funds that focus exclusively on investments in blockchain, which is a new phenomenon which didn't have a couple of years ago. Thank you.
I very much agree with my fellow panelists in the sense that there is a tremendous amount of skill set in Europe. As a matter of fact, at our own firm, which is based in Puerto Rico, half the partners are European. We do a lot of work on the tech development side with the suburbs, as Matej called them. And so there is a natural affinity towards Europe, towards the Eastern European part of Europe. I think the challenge is a little bit kind of bridging this communication gap between the private venture world and all of the opportunities that are available. So, you know, it's always good to get a helping hand from somewhere, but you have to understand how to ask and understand, you know, what people are trying to achieve. So, you know, specifically, you know, how I arrived at this panel is to see an enormous opportunity, but understand also that it's going to take a little bit of a learning experience to understand what is available and, you know, what my counterparts at the governmental level are looking to achieve and how to sort of engage with that process. So I think, so big plus is skill set is there, work ethic is there, the desire to innovate, do new things is there. You know, I've had nothing but the best experiences with working with the region, but to then actually understand, you know, how to tap into some of these programs that are available, which I think could move a lot more activity if that communication gap was bridged.
Valentina, from your perspective as the coordinator of a European Commission program that supports investments in AI and blockchain, like, what were some of the biggest surprises actually for you in this topic? And what Chris just mentioned, you know, this making connections between public and private institutions.
Yes, actually, I was already smiling because it's actually what we have seen in the last 2 years. Just maybe to explain a little bit what was the main scope of these initiatives was promoted by the European Commission in order really to make awareness about the investment pilot on artificial intelligence and blockchain. And what we really discovered, started to talk to the people speaking about private investors, but also public governments and national banks, is that there was really a knowledge gap, that most of the people were doing the same things, but not really talking to each other, not really being aware of what were the opportunity outside. This pilot could be the first one, but also some other national programs banks are doing something similar. I can make an example of of Germany, where we have organized an event, a market consultation. We brought around the virtual table all the key players active in the deep technology investment ecosystem. We invited someone from the European investment funds. We had someone from KfW, but also from the ministry, who is also investing on the new deep technologies funds in Germany. And actually, in parallel, there were a lot of private investors from Germany doing more or less and investing in the same sector that were not yet aware of what was, let's say, decided top down from the government. So, and the wish and the output of these events, of these initiatives, was really to be more connected, to be more in line and let's say align on the different programs, and to try to reduce this knowledge gap that was mentioned before also by you, Chris.
So we have, as David already mentioned, created 2 years ago this dedicated investment program. It's the first and only program in Europe right now that works at the European level to finance innovative startups, SMEs, for artificial intelligence and blockchain. So it's a huge deal for us. Why is it such an important thing? Because I think, as David pointed out at the beginning, there is a lot of investment in Europe, but when it comes to deep tech, we have a challenge. And so in order to address this particular market, we created this specific program. But handing over to David, what is this? How does it work? And what maybe are some of the lessons learned from this particular fund?
Yes, no, that's definitely something which has worked very well. This is actually, it was a pilot program of 100 million euros, which was designed at supporting ultimately companies active in the AI and or blockchain space, with quite frequently some overlaps in between. It was something, I said it was because as of today, we have utilized all of the resources allocated to this program, but the upcoming European programs, notably InvestEU, will have a strong focus on deep tech and AI and blockchain specifically, but it will be a continuation of those programs, which were, as I said, pilots to make sure that there was a market demand, that we were able to address it. So this was a program which was designed as being utilized either through our core business and activity of fund-of-fund investments or as co-investments. We used it only once for a co-investment because at the end, the leverage was much more important when invested into a fund, which then had to raise additional money. And then when the money was invested into ultimate beneficiaries, so SMEs, it was very common that those funds which benefited from the support of this program were also co-investing with other private money, so sources of private money. So it helped a lot, leveraging a lot the money available for those companies. So what we've done with that, besides this co-investment, we had invested into 13 different funds. There was a 14th one, but it didn't materialize because of the current pandemic situation, which did not allow them to raise enough money to become live, I would say. But this was also something really attractive. And what we are very proud of with this program is that not only we backed managers with a partial focus on AI and our blockchain, but also some highly specialized investors. What is very true as well is that the AI market is still more developed and more mature than blockchain for sure. So there's a stronger part of the money which has been allocated to investors that will deploy it into AI companies. But we have backed one fully specialized blockchain investor. I can disclose the name because it's not a secret. It has been published, so it is Fabric Ventures. And we also backed other funds, some of them having a dual strategy between AI and blockchain. So all in all, when it comes to blockchain specifically, there has been quite some, I would say maybe around 30 million euros at least at our level invested into dedicated strategies for blockchain, with all the multipliers I was referring to reach at least a level of 150 to 200 million euros for blockchain companies. And on the AI front, which was the remaining, which was split between specialized funds, again, deep tech generalist funds with a strong focus, or more, I would say, bigger and established funds with a strong focus on AI as well. And some of them also to a certain extent on blockchain. So all in all, the money has not been allocated to only emerging teams and neither to only established teams. So we have built a kind of balanced portfolio in terms of segment focus, stage focus, but also in terms of geographical coverage, because the money has been invested into managers established in Luxembourg, in France, in Germany, but also in Bulgaria, in Greece, and in other CEE countries or Southern European countries. So all in all, it gives a nice patchwork of what Europe is really, meaning that innovation comes from everywhere. And we also, as an investment agency for Europe, have a developmental role to help what we call underdeveloped market, but without the pejorative aspect, to get additional funding to support local initiatives.
Okay, well, thanks so much, David. But just to clarify, though, the total investment volume you're reaching with the fund, how big is it now? So with 100 million from public money, how much money you were able to raise, say, from the private investors?
On average, the funds that we backed raised at least 2 or 3 times more than what we invested. So it means out of the 100, it reaches already approximately 400 to 500 million euros at fund level. And then when it comes to the companies, given the fact that those funds do not invest alone in the companies, it's at least twice this amount. So it's more than 1 billion euros at the end, which has been made available thanks to this initiative, because for at least half of the funds, we were a bit larger than representing larger parts than 1/3 of the funds. So without this money, there wouldn't have been those funds. So this is clearly creating players to support those initiatives.
Okay, let's jump to Chris. What would it take for you or others to co-invest in these type of programs? How do you see that?
Absolutely. I actually had a question for David. So you focus predominantly on funds, or do you also sort of do direct investments in qualifying enterprises on a one-off basis? What's the strategy there?
I would say 98% funds.
98% funds. Okay, yeah. Well, that's I guess that would go part to answering the question, which is again, at first is sort of say, what is the opportunity? How does one have to structure it? We think there's a lot of opportunity in the region, specifically with the expertise of creating things on the tech side. I think sometimes focusing on what the market's looking for and the market acceptance, I think maybe there is a little bit of a different perspective where we can add a lot of value, but from the kind of programming side of things, obviously you have stellar resources in the region at great prices. And so, I mean, we're very actively looking about how we can basically collaborate with people on the panel in order to create sort of a structure where we would bring the private capital and leverage it and better understand, what the requirements are for the capital, both to trigger the capital and how to recoup the capital. So my next question, I guess, in answering this is to David, which is, when the private money comes in, is it pro rata pari passu? Is there some sort of preferred recoupment for the private capital or the public capital? How does the money basically, when there is an exit transaction, how does the money get recouped?
Very basically, this is a purely private mode when we make investments, meaning that we are lucky to have a very strong pipeline which addresses our policy objectives of developing sectors and geographies. So we are in a luxury position of selecting what seems to us, based on our experience and skills, the most relevant players and setups to generate the higher returns combined with the highest policy objectives. So this is the way it works. Then typically we represent a certain percentage. We can theoretically go up to 50% of any fund size, but for the market to be really, working in a coordinate way, we prefer to represent a bit lower, but to make sure that those managers that we back raise money. So it may be that at first closing we would represent more, and then either decrease our ticket or the manager will have to raise more at a certain stage in its development. But the very strong component we have in a recurring way is a focus on EU, investing into EU-based companies, because as you said, we have huge resources in terms of brain and skill set and technology development and research and development, basically. We have, I think, Europe has the highest number of engineers in the world, even more EU only when you combine the US and most of the countries of Asia. So we have a lot of raw material, I would say. Now, the next step is to make it become professional and marketable in a way that it will allow the emergence of European champions at a global level.
So from a private perspective, if we deliver $20 million in funding just for the math, just to do the math here, and you come in with a third, so 10 and 20, does that money get treated equally in terms of recoupment?
Yes.
Is it basic?
Yes.
There's no preference of one or the other?
No, we are promoting a pari passu treatment. Same risk, same reward for everyone. Yeah. And we are not here to give grants. We are here to make investments in something which will attract private money. So it has to be following the market rules.
So that answers the question in terms of recoupment. What about control?
In which way?
What kind of rights, like let's say you're a third of a fund, what kind of rights do you want to exercise in terms of capital allocation, green light of investments, or are you more passive once you've made the choice to participate in the structure?
No, we like to say that we are an active LP, meaning that we are on a very regular basis in contact with the managers. And you cannot imagine how many emails we receive on a daily basis to talk about any kind of topic. We have the regular, for instance, advisory board where we usually ask to get a seat, and we are sitting there on each time needed, but we are also very regularly consulted because over the last 25 years when we were created, we have invested in more than 700 firms. So we have some experience and some lessons learned to help people either avoiding making mistakes or helping them going into the right direction. What we typically ask is that the managers that we back have to be able to allocate a strong part and the largest part of their capital into EU companies. And then, if this is the case, and if we find the case attractive also from a commercial perspective and fitting also with our policy objectives, then we have what we call our magic triangle. And then we can process the deal and perform our standard investment process.
So, but I want to come back to Mate, because you actually have implemented this, right? You have this very exciting program together with Croatia on the ground, where you work closely with the EIF and private investors to set up these tech funds. So what are some of the ingredients of success? Like, what makes this work? What might be early lessons learned from you from putting in place this? You just mentioned, I think you have a 40 million euro fund you created jointly between Croatia and Slovenia, which we always thought was best practice from the EC perspective. And what is the secret of success? And if not, what are the key challenges?
I think one part of the success is the fact that we started the CGIP program in 2017, and Croatia followed on with their own equity growth investment program called CROGIP in 2018. Now, both programs have been, well, it's safe to say very successful so far. And the red tape concerning the collaboration between EIF, HBOR, Croatian Promotional Bank and Seed Bank has not been such a burden because we are only doing a top up of existing collaboration that we already have with the EIF. So that is one part. The other part is that we have been working closely on the private equity platform that EIF has. It's a board that takes place once or twice a year, I think, and it's a sort of an advisory board to the EIF equity platform. And both Seedbank and HBR are working there. So we have been working very closely and following up and exchanging details surrounding the performance of the equity program. Now, this year we have decided to do the top up for the tech transfer platform, whereby we invested 10 million, Croatia invested 10 million, and EIF came with 20 million, out of which at least 15 million need to come to end beneficiaries in Slovenia, 15 million to Croatian end beneficiaries, and the rest is divided to whichever projects are the best. So there's no ratio requirement for the rest of it. And whatever private investors come up with, also the end size of the fund is divided by the two countries independently by the fund manager. I think that is the success of the equity program is important. Also that we have opened many doors in terms of trust and legal frameworks and stuff like that for private investors as well. They have become aware of the opportunity that they have to invest in a private equity fund or a venture capital fund based in Slovenia or managed by Slovenian managers, Croatian managers, just local managers in particular. The important part is that the tech transfer is quite specialized. Basically, it's supposed to invest in projects during their pre-seed phase. So while the projects are still with the research teams at the public research organizations, so the investment period is supposedly going to be pretty long, because most of the number of investments are made in the pre-seed phase, and then the fund is supposed to do the seed phase and the Series A financing. So all the follow-ons will take place obviously later on, when projects reach their adequate phase of development. And there is a total gap in tech transfer in Slovenia and Croatia. Public research organizations have been really struggling getting their research commercialized. And this is basically, and also when we introduced the program locally, there has been great traction coming from the science community saying that this is perhaps something that is the best thing in terms of financing that has happened to Slovenian and Croatian science community in the last 30 years. So, so far we have had great traction. We know of a couple of interested parties that want to apply to the EIF call as fund managers. We have currently, it's more than 4 at least. And we have seen some of the potential pipeline. It's looking very good. It's generalized, but it does include blockchain and AI. I can confirm that. If the deals will close or not, that's the other point. But it has been quite a success. And also, we have been receiving some calls from potential investors, actually, from local investors from both Croatia and Slovenia lately, after the publishing of the fact of the call from EIF, that they have excess of money, that they have problems investing, and they are looking for investment opportunities, and they are interested to support the environment, the local development of the local environment, and they're even actually willing to do some what we might call impact investing. So it's going good so far.
Valentina, you have been coordinating a lot of market consultations with startups and also with investors actually around all of Europe. So what are some of the things you're hearing from them, and what are more concrete recommendations actually to us in terms of policy and setting up these programs?
Actually, the last suggestion from Matej, I've heard a lot, especially from investors that are benefiting from the European investment funds, but also that have some private LP. the fact that the money is there. What is missing in some cases is not the cases for all the startups, but in some regions, it's really good teams that are mature enough to access also different markets. And what is the limitation is the regulation, especially with regards to the blockchain in investing, especially in different countries. So this was something that was constantly repeated by the venture sides. On the sides of the startups, as we also approach them in different way, we have also done a survey. We have also identified the most promising startups, and we are going to publish a portfolio in the next months, also for both for blockchain and artificial intelligence. Some, let's say, recommendations for European Commission would be, of course, to try to reduce as much as possible the bureaucracy, because anytime they are, let's say, exposed to opportunities, public funding, there is this big issues related to the bureaucracy, and the fact that the access to Series A and Series B money is still in maybe more Series B money still in Europe quite a challenge. And this was also, let's say, reinforced by the venture sites, which let's say as soon as they want to follow up with a bigger ticket investment, speaking about 5-10 million, they were, let's say, complaining the fact that maybe the big corporates, they are still not mature enough to open up the doors to big type of investments. These were the main lesson learned that we have collected until today.
All right, so great. It was mentioned now several times again by a few of you, by all of you actually, the research and follow-up, right? So how do we bridge this gap from research to commercialization? Because still today, a lot of our best researchers, right, a lot of the best know-how is actually commercialized abroad. So there's just like a story of today, you know, Lilium startup in Germany goes to NASDAQ to go public. So many startups still, when they go public, they go to the US. So maybe Chris, you can start us off in this discussion. How do you think this, what is different to the US? What should Europe really learn to better commercialize? Well, we have this fantastic research, yeah, we have the fantastic engineers, but we are not yet as good in commercializing our innovations.
Yeah, I mean, you mentioned NASDAQ. I think in terms of high growth companies, we would still look to the US capital markets to provide both the capital and the liquidity you know, for those companies. That's not as pronounced in Europe. You know, over the last 10, 20 years, you know, Germany and other countries have tried to launch sort of NASDAQ type markets with, you know, not always the greatest degree of success. And so I think the overarching theme here is that, you know, Europe has the expertise, it has the governmental will to support the ecosystem. It probably needs to develop a little bit more on the financial infrastructure side of things. And catch up a little bit in terms of those instruments, and maybe that is also sort of embracing a little bit the risk. You know, the European culture is a little bit more risk averse. It doesn't tend to value someone trying and failing as much as in the US. Somebody said, well, he tried and he didn't make it, but maybe he'll make it next time. Whereas in Germany, sometimes it just stops at the failure, saying, well, he failed, so that's next person, please. And so that culture, but I think it's changing quite a bit. And so I'm quite positive on where things are heading. But venture, by definition, you have to embrace failure. You have to be okay with somebody tried and they didn't get there, but maybe next time they will.
Actually, we got a very interesting question from one of the participants. Thank you so much. It's about the experience in the US with Small Business Act, the Small Business Administration. And so is there more money flowing from public resources into startups?
Well, I mean,
we've
had a number of programs. We've had a number of programs from, you know, due to the pandemic that have been introduced, including a number of them managed by the SBA. the Small Business Administration is still, you know, at least if you look at the traditional programs, a relatively cumbersome program. So it's not sort of an easy program to access. I wouldn't sort of say that, you know, hey, you know, this is a stellar example on how to do it versus what's going on in Europe. That is probably the closest you have to the European type programs in the US. Lots of paperwork. They kind of very much look to kind of personal recourse. A lot of times people use property as collateral. So there are those programs, but they're also not as easy to access as you would think. But the SBA recently has administered the Paycheck Protection Program and some of the other programs that specifically came up to help the economy due to the pandemic. So you have to kind of separate those two aspects.
Maybe over to you, David. How do you see this commercialization gap? Do we have a gap in terms of commercialization or not?
I think actually we have a couple of gaps. As I said, the early stage segment in Europe works well, and we can only see it by the increasing number of unicorns, even though it remains paper money until the exit. But I would say the main gaps are first, and importantly enough, on the R&D part with this technology transfer side of the business, but also, as Christopher referred to, when it comes to growth investment, we are still lacking in Europe managers with large enough funds, and by large I mean of 1 billion or more, which would allow them to sign checks of 50, 60, 100 million euros into a single company. This is not something we see in Europe. We have maybe 3 of that types in Europe. We will need at least a dozen, if not more. And maybe the last gap, and this one is maybe partially also related to cultural behavior, I would say, the exit market. It's still largely happening in the US. You were mentioning the IPO on NASDAQ, which comes also because this is a much more dynamic and liquid market with many analysts following it, maybe more than what we have in Europe. We still do not have a large capital market in Europe. We have national ones. We have one in France, one in Germany, in other countries. We should have a bigger one. There was a temptation of getting a much bigger one a couple of years ago, which didn't materialize between Berlin and London. Now, London, it's a bit more complex, and we will not go into this direction of this keyword topic. But basically, we are lacking an exit market in Europe, which comes partially with IPOs, but also with a change of mindset of big corporations. We still see 90% of the exits happening in the US, led by US corporations. Where are the European ones? Many of them have resources, would have a huge strategic premium by acquiring those new companies, innovative companies. They don't do so. They do not do so. When we saw a large corporate acquiring a startup in Europe a couple of years ago, it was in the magnitude of 200 million euros valuation of the company. The same company in the US would be getting at least 4 or 5 times more money. And for sure, as an entrepreneur, we can understand that there would be, after having spent lots of years, hours, every day, all their life dedicated to the companies, that they would be going for the ones giving the biggest reward. This is something, frankly, I just don't even know how to make it change. But this is something which would change the paradigm if we had an open market for exit.
Well, thank you. So from our side, the Commission side, we also, of course, acknowledge this very important challenge. And I wanted to share with everyone, we have launched this DISC program, Digital Innovation and Scale Up Initiative, which is specifically supporting countries Central and Eastern Europe in the scale up of startups. So there basically is a program within the InvestEU to really leverage opportunities, because we have seen that many of the brightest minds and a lot of these startups, actually 45% of startups, successful startups in the region, I mean now Central Eastern Europe, are unfortunately relocating. So it's not just UiPath from Romania, which some of you might know, but also blockchain companies are being get a lot of incentives to basically work outside of the EU. But we are taking action, and that's why we have now also this next scale up of the AI blockchain fund, which is on the, we are just discussing that, how we had put in place a strategic digital technology fund. So, but coming back to Mate and how you see that, you said there was first, I was really struck. You said something very interesting, that you said when you started out working on these funds, yeah, on these programs, there was no pipeline, or you thought there was no pipeline. So our own findings is we found a tremendous pipeline in countries like Slovenia, Croatia, Bulgaria. So what is it now? Is there a pipeline or is there no pipeline?
Yeah, thanks for the question. Actually, there was too much pipeline. We were concerned with the private equity program, which is devoted for growth equity for well-established companies in 2017 when we started off, that there will be very little pipeline, or that the quality of the pipeline will be questionable or something like that. But at the end of the day, it turned out that there was actually too much pipeline. The fund managers were struck, you know, driving all over Slovenia and finding out how many innovative, commercialized opportunities there are available in Slovenia, actually, that nobody was aware of. So they were able to do the cherry picking of their investments. We believe that we will have a very similar situation actually with the tech transfer fund. What we've seen so far, example for a potential pipeline from just the Slovene biggest research institute exceeds 80 potentially very, very useful and commercialized ready opportunities. And this is only one institute. So there's really a lot going on. There is the researchers are, in terms of their academic profile, are very successful, but their innovations simply don't reach the real economy. And this is what we are trying to address with the tech transfer platform. And the same goes for Croatia, actually. And just in the recent years, I have to say that, for instance, the tech transfer offices that are established within the universities and research organizations really doubled or tripled the number of employees in Slovenia, for instance, especially in order to deal with potential financing. So we are slowly setting up the entire structure and hope to see some deep tech situations, deep tech investments as well. However, if we did venture eventually into deep tech specifically, we would have to broaden the region. Absolutely. Even with the tech transfer, we had to enhance from Slovenia to Croatia as well. So it's not entirely local or limited to just one country. The more specialized we go, the broader we need to have the region that we want to cover. So this is something that will still have to be done. Exactly. Market size in order to, get the private investors interested into investing as well. They don't want to be too much exposed to just one market and just one focus area. It gets too risky for them too quickly.
I want to share with you quickly, like 2 years ago, we took 100 startups from Central Eastern Europe to Slush in Finland and connected them to a complete different ecosystem in Finland, Sweden, and Scandinavia. And we were really amazed how fragmented still the different, innovation ecosystems are inside of Europe. So isn't it that we just have to better connect the different ecosystems? Maybe a question to all of you.
I think that that the diversity of jurisdictions in Europe is a problem. For instance, in Slovenia case, and for Croatia most likely, and for Romania, Bulgaria, countries like that, lack of knowledge is also a problem. When you have to deal with bureaucrats and regulators and stuff, they are not aware of the type of investments that you want to be doing, what's the tax treatment. There's lots and lots of difference there. It is also very difficult, and this is what we have been hearing from potential VC fund managers, because we are topping up CGIP with a VC program as well in a couple of months. They're saying that if you want us to have a fund registered in Slovenia, then we will have a great problem getting investments from foreign institutional investors, which I agree, right? But if we don't get the funds registered in Slovenia, then we will never have, the infrastructure to support such funds in Slovenia, because now we have some legal framework on how to set up a fund, but there is no tax treatment for such funds, which for investors obviously is a problem. But if we don't, we have to start somewhere. So it's a question of a chicken and an egg, actually. And what we want to do as a promotional bank, and this is not being nationalistic, but it's actually having to do with what directives on an EU level want to do, basically to unify the approach throughout the entire Europe. And this is what we want to do here as well. If we get some baseline on which we can, build the infrastructure, then eventually we will catch up. But if we allow for, companies and investors and etc. to just simply move from Slovenia to another EU country, I know it's still good for Europe, but it doesn't really address the issue of equal regional development, so to say.
Well, thank you. So we have 5 more minutes, so I want to give every one of you one very short minute. So
very short from my perspective, yes. So we talked and we are talking to different ecosystems. So and for sure we are based in Germany, and every time we raise our hand and talk to someone not from Germany, they always try to, let's say, be exposed to our ecosystem, because we are quite good in bridging also the gap between the industry and investors and the startups. What we have seen, especially in the East countries, is that, of course, they do have the knowledge, the skills are there. What is still missing, based on what we have seen, is really the connection with a lot of sales competencies, what they still do not have at startups level, and the connection also with the corporate that are willing to work, not only invest, but also to work with them. So the fact that before David was mentioning to have a single market, of course, ideally, this could be a kind of solutions that might, let's say, reduce this type of gap.
David, maybe, or Chris, please come on.
Well, I mean, basically, I think, like listening, it was a great panel, and I really look forward to sort of continuing some of these conversations that we started before and continued here. Sometimes the way you start a venture ecosystem where it doesn't exist yet is you think in terms of a fund and multiple investments, but maybe you focus on taking a group of people that are used to kind of doing more, but maybe you focus on 1 or 2 specific things. In other words, you don't actually have a fund yet, but you get together to sort of do 1 or 2 specific investments with the idea of growing into a fund. That's sometimes how people that are starting to put together, a venture vehicle, they just start with kind of building a track record. So in terms of what Matej was saying, maybe the focus is to find, you know, a few really interesting opportunities, and then pulling in international, European, and outside resources to actually sort of, you know, start to anchor those resources to the region and saying, hey, if it goes well, let's build out from there.
All right, David, I think you have the last word.
Yeah. Okay, thank you. Yes, something which actually, and it comes back to one of your questions on the lessons learned. I agree with everything which has been said here. We should try to do more, but at the same time, we shouldn't be less demanding towards opportunities coming out from the underdeveloped and underserved regions. Because if that was to be the case, then we will not find private partners to join us and support these initiatives. So we have to apply the same standard, the same level of requirement, and it might be even more difficult. The threshold might be even higher for those teams which are just emerging. But as I said, we have a number of them in our pipeline at a quite advanced stage, and we see things which are definitely really captivating. And we are convinced that if we, with our experience and what we see, on average, we see more than 400 opportunities a year, but select 40 to 50 of them. So if we, with this experience and with this helicopter overview, as we say, are still captivated by new initiatives, new teams, new strategies, we will not be the sole ones. So we will still apply our usual quality filter and apply the best market practice that we have been supporting to develop in Europe. And hopefully it will help the market to further develop and catch up with the other geographies.
Thank you so much. Thank you everyone for this fantastic panel. And we're handing over to the great organizers of the European Blockchain Week. Thank you again.